in this video, I'm going to address the personal property aspect of the SBA loan, the Small Business Administration loan that is given to individuals that do not have businesses but that were affected by a presidentially declared natural disaster. So they have various types of loans, the SBA, that they offer to people, and one of those loans is for personal property that was lost or damaged. So if you have a vehicle that was damaged, if you have bed, clothes that you've got that were damaged, whatever, they will cover a loan to replace those things. It's not free money, it's a loan. Now you do have to declare what those items were. If your vehicle was not damaged in the storm, then they do not want to provide a loan for you to go get a vehicle. But the good thing about the personal property loan is they're not picky about how that money is used. If you do end up going and getting a vehicle with that money, it's kind of frowned upon, but they don't really set a really high standard as to what you use that money for. Now the cap, the most that they will offer in a loan for personal property is $40,000, and there's a little secret to how to get to that point with $40,000. So let's say you were a victim of Winter Storm Uri and you were displaced from your home for a year, and you find out after you've kind of put all the numbers together that you've lost somewhere around $500,000 of personal property, and your insurance company says, here's $20,000, have a great life. Then that balance there, the $480,000 loss, SBA will recognize. They will not give you a loan for $480,000. They will only give you a loan for $40,000. But the way to get there with them is you have to have a list. It doesn't have to be a super detailed list like insurance requires, but they do want to see a list of the items lost. These items cannot be used for a business because that's a different department in SBA. If you have business items that were lost in a storm presidentially declared disaster, then that's a different application, and they will put you off and say, oh, well, you need to go to this other department. Nice to meet you. So these are your personal items, your clothes, your bed, cookware, anything, your tools, your personal tools that you use, anything that was in your home that was destroyed. They will offer the $40,000, but what you have to do is list your items, and it has to be over and above whatever insurance gave you. So back to the illustration, the insurance gave you $20,000. If you submit to SBA a list of items and it's worth $20,000, and insurance gave you $20,000, SBA says, we're done. You can't double dip. You're not going to get another $20,000 on top of us, even though it is a loan. So if you go back and you say, actually I lost $500,000 worth of stuff and insurance gave me $20,000, you have to list those items, and then, and only then, if the $40,000 plus whatever insurance gave you equals the maximum coverage, only then will SBA actually give you the $40,000 loan. Let me see if I can simplify that a little bit. Anything that insurance gives you, take that amount and add $40,000 to it. So if insurance gave you $20,000 for your personal property, plus $40,000 from SBA, that's a total of $60,000. You need to show $60,000 of loss. For me, I had a whole lot more than $60,000 of loss, and so we therefore qualified for the $40,000 loan from SBA. But it wasn't without a whole lot of headache. It took probably 8 months for me to find out that that's how that works. And they will not tell you this information. They will tell you they will not tell you this information. And it's very frustrating, but just know that their cap that they will loan you is $40,000, and that it has to be over and above whatever insurance has given you. They do not count any depreciable funds. So if insurance gave you $20,000 and they said, once you replace these items, we'll give you an extra $5,000. If they haven't sent you that $5,000, SBA does not count it. They only count whatever you actually have in your possession, and that goes against whatever amount they're going to give you. But if you get that amount at up to $40,000, up to whatever insurance gave you, and over that, then you'll be golden. You'll have no problem getting that loan that can be used in any way, for the most part, that you feel like you need to use it, including paying down your mortgage.